Of course, Rise business analyst Bode Ososami is here to take us through the markets as the New York Stock Exchange opens for cash trade. It's good to have you with us. Now, it seems NASDAQ is beginning to struggle after a strong first half and even a strong start to the week. How is the week likely to end for tech stocks, you think?
Well, NASDAQ is slightly up 0.56% on open. Dow 30 is also up 0.18%. On open, and S&P 500 is up 0.35% on open. The Dow will aim to seal a 10th consecutive day of gains. NASDAQ may be cheered by the absence of fresh bad news. Microsoft, Alphabet, Meta, they will not report until next week. Technology shares, they seem to be taking a breather from impressive gains we saw this year, but NASDAQ is still up over a third year to date. The other thing is that so far, 74% of S&P 500 companies have beaten earnings expectations, but only 52% of stocks rose after results. So growth stocks are expected to keep growing or take a fall as markets are harder to please given the high price earning multiples. Also, a Fed decision looms on Wednesday with possible new hawkish language and maybe a hike. The outlook for technology stocks certainly looks a bit uncertain. The thing is that there was always that general hunch that the rally in the first half was overbought, and the market wants to see the money. There's a shift towards fundamentals, which is why you may see tech stocks beginning to struggle. Just looking at where they are now, NASDAQ is still creeping up 0.6%. If you look at most of the tech shares, Netflix is down 0.5%. Microsoft is up 0.39%. Meta is up 0.14%. Apple is up 0.74%. Amazon is up 0.33%. Tesla is up 1%. Nvidia is up 0.11%. Activision is up just 0.06%. TSM, that's Taiwan Semiconductors, is down 0.48. So it's a very, very mild increase. And if NASDAQ ends the week in positive territory, it'll just be barely positive. But let's go through some of the things that we saw during the week. The bottom line is, given how most of these stocks have skyrocketed, I suspect nothing short of extra super results and very positive outlook next week will sustain the rally. Indeed, it was a very busy week for tech. We got earlier in the week Microsoft unveiling its AI-powered service, the 365 pilot, and they also announced the more secure version of its AI-powered Bing, especially for businesses. Apple was also said to be quietly working on AI tools that could challenge those of OpenAI, Alphabet, Inc., Google, and others. But we don't have a clear strategy for that. Even though the FTC released new merger approval criteria, Microsoft and Activision seem to be making progress in deadline towards the merger, even though they extended the deadline. By Wednesday, the NASDAQ actually closed up by 2.3%. as the upbeat chatter gave further a boost to the AI-driven rally. But the narrative changed on Thursday. SAP disappointed, missed analyst estimates for the cloud unit. That's its major business. While CEO Christian Klein spoke of economic pressures, Tesla also took a beating. CEO Elon Musk said we are in turbulent times. Netflix saw revenues short of forecasts. Taiwan Semiconductor Manufacturing delivered a disappointing outlook. So it all pretty went south. And of course, markets are a bit concerned. Today, no news you could say is good news. But what happens next week when we see many of the others beginning to report? But as we look at these stocks now, they're still in positive territories, climbing up, I dare say. NASDAQ is up 0.76%. Dow 30 is up 0.16%. S&P 500 up 0.36%.
Indeed, interesting update on the markets there. I'd like you to hold on while we take more business stories. Retail sales in the United Kingdom rose by 0.7% from the previous month in June 2023, picking up from a downwardly revised 0.1% increase in the prime month. an above market expectations of 0.2% rise. Now, this was the third straight month of growth in retail trade, and the steepest pace in the sequence, with non-store retailing sales increasing by 1.0%. This benefit from summer sales and the good weather as well. Meanwhile, the market research firm GfK Limited said its reading of consumer confidence fell 6 points to -30 in July, the sharpest drop in 15 months and the lowest reading since April. Now, economists had expected a shallower decline to -25. Elsewhere, headline inflation in Japan rose slightly to 3.3% in June, posing increasing challenges for the Bank of Japan as it seeks to maintain its ultra-loose monetary policy. The annual increase in the Consumer Price Index rose from 3.2%. That's in May due to higher utility bills. Price pressures in Asia's most advanced economy has started to broaden, raising market expectations that the BOJ will adjust its yield curve controls at its policy meeting next week. Meanwhile, SAP shares fell in New York after second quarter sales in its cloud unit missed analyst estimates. Sales at the cloud unit, which is the company's largest, rose 22% from a year earlier to 3.3 billion euros. The Waldorf, Germany-based company said in a statement on Thursday. That is less than an average analyst forecast of 3.41 billion euros. And now, a special purpose acquisition firm that is set to merge with former U.S. President Donald Trump's media company has settled regulatory charges that it had made material misrepresentations to investors. The U.S. Securities and Exchange Commission said on Thursday that Digital World Acquisition Corporation, which was found to have violated federal security laws, agreed to a cease and desist order and to pay an $18 million penalty if it closes the merger. DWAC's shares surged about 24% after the bell on hopes the merger, announced in October 2021, could be forward after the fine. U.S. Transportation Secretary Pete Buttigieg yesterday said his agency has national security concerns about Chinese autonomous vehicle companies in the American market after some lawmakers called for restrictions on their operations. Buttigieg said the United States needs to better understand the true ownership of the different enterprises that are supplying different elements of the nation's transportation systems, added that in the same way there are concerns around telecom or TikTok, there are similar concerns around transportation technologies as well. Now, FTX Trading on Thursday sued founder Sam Bankman-Fried and other former executives of the cryptocurrency exchange seeking to recoup more than $1 billion they allegedly misappropriated before FTX went bankrupt. The complaint filed in Delaware Bankruptcy Court also names as defendants Caroline Ellison, who led Bankman-Fried's Alameda Research Hedge Fund, former FTX technology chief Zhijao Gary Wang, and former FTX engineering director Nishad Singh. FTX said the defendants continually misappropriated funds to finance luxury condominiums, political contributions, speculative investments, and other pet projects, while committing one of the largest financial frauds in history. NatWest Chief Executive Alison Rose has apologized to Nigel Farage for dropping him as a client of its private bank codes as the UK government accelerated plans to clamp down on bank unfairly closing accounts. Rose, who earlier this week was named as one of Prime Minister Rishi Sunak's 14-strong business council, wrote to Farage on Thursday to apologize for the decision that led to the account closure of the former leader of the UK Independence Party and Brexit Party as well. She also pledged to personally oversee a full review of processes at Coates, once known as the Queen's Bank. 7 top artificial intelligence companies, including Google, Microsoft, Meta, and OpenAI, will meet at the White House on Friday, pledging to create ways for consumers to identify AI-generated materials and test their tools for security before public release. The 7 companies have agreed Friday to a set of voluntary commitments in developing AI technology. And Nigeria's external reserves fell to $33.9 billion on Wednesday, July 19th, 2023. That's its lowest level in 2 years. This is according to data from the central bank obtained from its website. The last time the external reserve was this low was in July to August 2021. We now cross live back to London, where Rice business analyst Bode Ososami is standing by. Thanks for staying with us again. Now, first on the agreement, which will be formalized at the White House on rules for AI, what else do we know?
Well, the meeting is taking place today, and what Biden is going for is voluntary commitment. There is already communication out on what these commitments include. Obviously, this is the way to get started. Quick wins where there is obvious agreement before you move into more potentially contentious rules. The commitments include helping consumers easily identify AI-generated content, such as through watermarks or some other visible sign, so that you know whether you are seeing something that is AI generated or not. And then, of course, commitment would be things like engaging independent experts to assess the security of their tools before releasing them to the public, so you get an independent assessment of some sort. Sharing information on best practices and attempts to get around safeguards with other industry players, government and outside experts is another thing they're committing to. They also want to allow third parties to look for and report vulnerabilities, that's weaknesses in the system. So that, I guess, makes sense. And the reporting limitations of their technology and guiding on appropriate use of some of these tools. The other thing they're looking at is prioritizing research on societal risks of artificial intelligence, including around discrimination and privacy, and developing AI with the goal of helping mitigate social challenges, societal challenges such as diseases and, of course, climate change where you can. So my sense is this meeting definitely may have helped sentiment. NASDAQ, as you speak, is up 0.5%, and most stocks in the tech territory are in positive territory as we speak, or just slightly negative compared to what we saw yesterday. But like I said, we didn't get much data today, and all eyes on what happens next week when the data comes in. But all the top guys, the CEO of Amazon Web Services, Adam Selipsky, Microsoft President Brad Smith, OpenAI President Greg Brockman, they were all at this meeting, and they were going to be at this meeting. And the Biden administration said they consulted with other countries so that at least it will be easy to get this to spread all over the world. So I think it's the way to start, and definitely this must be positive for sentiment.
Indeed. Now, elsewhere, will Japan be able to continue to maintain its ultra-loose policy as inflation creeps up there?
Well, the annual rate edged up to 3.3% from 3.2%. Markets had expected, the forecast was to get 3.5% in June, so that's good. Also, on a monthly basis, consumer prices rose 0.2% after being flat in May. Some of the areas that went up included food, housing, transport, furniture, and household utensils, clothes. But in contrast, prices of fuel, water, light, and so on decreased for the fifth month in a row, mainly due to drop in electricity prices. But what analysts are looking at is the index that strips away both fresh food and fuel costs. That's the gauge the Bank of Japan usually use. And that index rose 4.2% in June from a year earlier, slower than a 4.3% gain in May. Also, the first slowdown since January 2022. So if you look at services prices also rising 1.6% in June compared to 1.7% in May. So that drop in services prices and the drop in that core or inflation, excluding food and fuel, gives some assurance that there is some moderation, and the ultra loose monetary stance may still be in place, especially as we don't get that feeling of wage pressures that could move them to slightly tighten. Definitely, the BOJ is prioritizing economic growth. The economy expanded 1.1% last year, slowing from a 2.1% rise in 2021 due to all the lingering global headwinds.
Very good. And where you are, we just got June UK retail sales data this morning. What else are we learning?
Well, it went up by 0.7% from May's revised 0.1% increase, and more than triple market expectations of a 0.2% rise. That's the month-on-month increase in retail sales for the UK. Also, it was the third straight month of growth in retail trade and the steepest pace. Ordinarily, that would have been, I would say, good news, but we also got the GfK market research data release, which said consumer confidence, that's reading of consumer confidence, fell 6 points to -30 in July, the sharpest drop in 15 months and lowest reading since April. So when you juxtapose the June retail sales and the more current GfK consumer confidence reading, there's little assurance that what looks like a bounce back in retail sentiment will be sustained into future months. So I think we're still in a wait and see stage to see whether this recovery is going to be sustained subsequently.
Indeed, I couldn't agree more there. Now, lastly, in Nigeria, it's reported that the country's FX reserves are down. Should we be worried at this rate?
Well, what you consider first with reserves is the import cover, $33.9 billion reserves. And if you use Q1 import at the official rate, then it comes to about $12.3 billion per quarter of imports, or about $4 billion per dollar. $4 billion a month. If you factor the increase in maybe import in anticipation of higher growth of, say, 20%, that comes to about $5 billion a month, which is still 6 months, over 6 months cover. If you look at it at 3.9 billion, that is not a precarious situation. The factors, of course, to consider: oil prices trending up over $80, still capped by demand uncertainties. The autonomous inflows, which is driven by confidence, that will take time as reforms are embedded and bottlenecks in capital flows are removed. And of course, ramp up in exports as financing targets more export possibilities. We can't rule out capital flight, especially initially. So we could see a spike in FX demand and, of course, panic buying as businesses fear that the sustainability or of appropriate levels of future supply is still something they want to wait and see. But if you get import cover of under 4 months, watching the numbers, definitely that could mean that the reforms need to find equilibrium, but still you will be worried. The IMF, for example, providers, International Monetary Fund, they provide some bridging working capital facilities where you have a longer settling process, and they can serve as an anchor to bridge trust, the trust gap. But the IMF, the International Monetary Fund, they are not the impossible mission force. They will likely insist on more aggressive easing of capital flows. And I still heard there are many bottlenecks in the I&E window, and the government should just listen to entrepreneurs and investors and make necessary adjustments to improve the situation. It could also mean more still needs to be done at the trenches to ease capital flow and make the country more attractive for especially foreign direct investment.
Indeed. Very good. Bode Ososami, a Rise Business analyst. I'd like to thank you for your input. As always, good to have you.